Hey, Glenn, what's going on?
You know what is good for us is Tom O'Brien providing an unbiased source of information for us investors. You don't have an agenda. It's just to cut through everything and to give us the facts. I want to thank you.
Well, I appreciate it, man.
And now, here's Tom O'Brien.
Well, welcome, folks. This is Tom O'Brien of TFNN. Well, 5 days a week we go, 2 hours a day we go, 24 hours a day in the internet. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great weekend, safe weekend. Let's make it a great week, folks. Let's take a look at one of our 4 agreements. Love coming out of you is what makes you happy. The whole world can love you, but that love will not make you happy. What will make you happy is to share all the love you have inside you. That is the love that would make the difference. Market-wise, let's take a look at it out here. We had the Dow down 79, Nasdaq off 39, S&P's off 11 and a quarter. Gold contract up $4, trading out at $1,433 an ounce. Silver up 67 cents at $36 an ounce. Platinum down $20 at $1,822 an ounce. Copper down 13 and a half pennies at $4.34 a pound. Light sweet crude up 62 cents, trading out at $106.23 a barrel. Bonds down 8 ticks, trading out at $118.31. Dollar index up 6 ticks at 76.48. Euro 139. Yen 82.25. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we have out here? Well, when we go back, you go back to the 18th of February. What we have out here, folks, is that the 18th of February, S&Ps were at 1338. Up at those levels, you did 1.1 billion. You came off the 18th and you come down hard. On the 22nd, we was the first leg down with 1.3 billion. That level, try to get back into that level twice so far. March 1st, we tried to get back into that level with 1.1, couldn't handle it. Try to get back into that level on March 3rd, couldn't handle it. 1332. What we have out here, we did 1 billion shares today. You're going to go after the low that was established on the 24th. Now, the 24th of February, we had 1.2 billion. We did 1 billion today. You're going to need an expansion of volume as you get into those levels. Bottom line, I suspect not only that the 1294 wants to get hit, but the 1275 wants to get hit on this leg. You know, this is building cause to get into lower price right now. That's on your S&P. We go to the Dow Industrials. You take a look at the Dow. It's the same type of setup. What the Dow had got into that high on the February 18th, 12,391. You're off that high by 300. No big deal. But Dow wants to try to get into this 11,800 area. Now, the composite, Nasdaq composite. Composite actually had gapped away. Now, this is always dangerous in the composite. The Nasdaq composite had closed at 28.33 on the 18th. As that moved away, your first gap away was a big one. What we did here on the 22nd, you gap down, and you gap down on 2.279 billion. It accelerated further with 2.495 billion. Today we did 2.185 billion. The Nasdaq, we are at the 2745 area. That wants to get into that 2679. I suspect we're going to be seeing that pretty quick. Now, if we go over to the SPY, you look at the SPY and see the correlation. Well, what you had with the SPY out here, you had made a high. February 18th, you made that high with 130 million. You sold off with 233. You sold off today with 202. You go to the 4Qs. We take a look at the Nasdaq 100. What do we do out there? Nasdaq 100 made that high up there at 58.97 with 44 million. You sold off with 92 million. Today we sold off with 91 million. And of course, inside the NDX, it was a beautiful thing when Apple was going up, and it's a disaster for the Nasdaq when it's going down. Out of 31 points, Apple was 6 of them. Oracle 1.5. Google 1.4 and Qualcomm 1.4. If we go over and we take a look at Apple, what you have with Apple is this. 19 million shares on the way down today. That's going against 16 million. Apple, came back pretty good, actually. Apple was as low as 351. It closed at 355. Bottom line is that it had gone over the 18th, which is the 359. Couldn't handle it. That says 337 is wide open, as is 326. 326 was the February the January 18th low out here. Gold contract. Let's take a look at gold. What we have with gold out here, gold gets over its highs out here today, closes underneath them, has 155,000 contracts. Now, there's a lot of action in the commodity markets, folks. The first high, when we look at this, when I look at how the distribution's taking place here, you go to November 9th. November 9th, gold's at 1428. Comes off that level, gets down $100, $90 to be exact. Comes back up, tested again. December 7th gets to 1434. That's where we had the 255,000 contracts. Couldn't handle the 1434, goes down to 1311. Comes up today, gets over the high, all of the highs, closes underneath them. That says it wants to come right back down the other side, meaning the 1309 level. We go to the GLD, which is of course, that trades at 1/10 of the price. Bottom line, you did 13 million shares versus that high out there of 26 million shares and versus 39 million shares. Big, it's distribution at highs. Some of the gold equities, also, you talk about off the highs. This is pretty incredible, actually. Rheingold was down $3 today. The high in Rheingold, folks, is 106. You're trading out at 77. An Eco Eagle. We take a look at an Eco Eagle. What you have with an Eco Eagle out here, she's at 69.77. That high out there was 88. Now, oil. Let's go over to that oil market because that oil market has been rocking and rolling, no doubt about it. We take a look at the oil market, what we have out here, and oil gets to a high out here today of 108.25. That baby did 138,000 contracts, and what I expect you're going to see out here is this. It doesn't even matter what happens in the Middle East. Why, folks? Because it's all about the U.S. dollar. The quickest way to basically conquer the Middle East, by the way, folks, is the U.S. dollar. The bottom line, the U.S. dollar right now, when I say conquer, I mean these people, I'll get into that for a second. Bottom line is that what you had with the U.S. dollar here today is this. We get to $76.14. It was testing out the 76.17. It rejected it. What that's saying is that the dollar now wants to go from the 76.16. Can't bust them down. It's going to bust them up. 81.93 is all over it. And that is the quickest way, folks, to do two different things. To bring the price of oil down. The rest of the commodity structure out here today got hit pretty hard. We had wheat down 31 cents. You had copper down. You had corn down. You had hogs down. You had soybeans down. Gasoline was down. Heating oil was down. It was getting hit and was getting hit hard. And if you go back to whether you're dealing with high oil prices, that dollar accelerates up. That croaks oil ASAP. There's all this talk about Libya, between no-fly zones and sending our troops over there. I think they're right out of their mind. Bottom line, the way to bust that whole place out, folks, is you put the dollar up. That croaks oil. They can fight for themselves out there, just like anyone else can fight for themselves. It's not our fight. Let's go to Kevin in Massachusetts. Hey, Kevin, what's going on?
Hey, Tom, how you doing today?
Doing great. You having a good day out there?
Hey, man, it's beautiful sunny here. We're getting rid of the snow finally.
Perfect, man. Perfect.
We still got about 2 feet. Can you believe it?
I know. I heard because my cousin just came back, and I know between the snow and then it started raining, right? So there's the big problems with flooding too, right?
Yeah, right. Unfortunately, yeah, that's the problem. But the funny thing is that we've finally seen a roof of our house since December 26th.
Oh my God. That's crazy.
That's funny, man.
That is.
Anyways, what's up with two questions? GOLD, Rheingold, that is like, whoa, man, that was down today. Is it going to test that low, and if it does, on lighter volume?
It doesn't look like it's going to test it on lighter volume. Looks like it's going lower. I mean,
lower, you think? Yeah.
You have that 75 low, and Rheingold can get into. You bring this back a bit, and it looks to me, and that's why I'm watching Rheingold so closely, because Rheingold still is one of the best stocks out there. The way this is trading here at 77, man, this thing can get all the way into 58 and get into 60.
Is there something wrong with this company? I mean, is there something that somebody knows that we don't know? Or
why are you saying that?
I mean, gold's gone up, and this thing is nothing but gone down. You
can take any and just about every large cap, and it's the same deal. You can take an Eco Eagle. An Eco Eagle is off the highs from 88 to 69. You can take Newmont. Newmont's $10 off its highs. Newmont's going to do an ABC down. That's how the large caps are performing. The only place to be in the gold market, as far as I can see, is that you get the small caps, you get the exploration, and the South Africans. That's the next play in this whole gold market. What you have is this, folks, okay? You have monster distribution that's going on. People are not paying attention right across the board. Now, what is really wild, and when I was just on CNBC, I was hoping that they even asked me about silver, because, of course, the silver bulls out there are saying, hey, silver's going to go to the moon. And you know what? God bless them. I hope it does for them. But my take is that it's not going to, and I can tell you why. When you look at the PSLV, now, this is a closed-end fund, and no doubt closed-end funds can trade at premiums, okay? Bottom line is that this is trading at a 19% premium. So it's like, what are you, crazy? They're buying this fund at $16.86. The fund is telling you it's only worth $13.59. If you like silver, great. Go out and buy 100-ounce bars of silver. These people are going to get so smoked. And what that's telling me is that it's not only the retail crowd. Inside of this, there are professionals buying this fund at a 20% premium. Wow. That is a loaded gun, and that loaded gun is going to be going off. And
by the way, I do get your gold report, but I just want to. So I know we've done well with a couple of the smaller ones. I'm just curious. I just happened to see this one today, so it's like, whoa.
Yeah, no, it wants to trade lower.
Can I give it another minute for one more?
Sure.
Oh, look, AGD. I was over the weekend. I found this one.
AGD. Okay, so this is the Alpine Global Dynamic Divide. Diversified closed-in management, let's see, 50% qualifies for reduced federal income tax rates. So it's a dividend. So it's a dividend play, right?
Yeah, it's a dividend.
The fund invests 80% of his assets in equity, securities, domestic. Okay, one second. The fund's objective is to seek high current dividend income, more than 50% that qualifies for reduced rates. Okay, so I wouldn't be buying this right now.
No. I just happened to come across it.
Yeah, no. You went from 780 first off down to 710. You do a counter trend bounce up to 8, and then you're back with the volume again. I mean, I suspect this will set up, but right now I wouldn't be biting on it. No, I didn't. I just happened to see it pays a 9.5% dividend. So it's like, geez. Yeah, well, it'll be paying a bigger dividend for you when it gets to $6.0550. That's the buy. No, seriously, man. Oh, I know. I agree. I totally agree with you. There you go. Yeah, take care. Bye-bye. Okay, have a great one. Have a safe one. And you know what is pretty wild, folks, is that when we look at the dollar out here, too, by the way, you heard all of last year. Now, we haven't heard this for a while, but all of last year you heard that the Chinese are getting out of our bonds, Japanese are getting out of our bonds. Factually, folks, that's not correct. Factually, the last, I was looking at the numbers this morning from last week and from last month. This is what it is. China actually has got 37% more long bonds, and they swapped out their short-term bonds. They got $1.3 trillion. They upped the deal. Japan, did the same thing. So the bottom line is that we are getting long money at cheap rates, and this dollar rejected the bottom. We're going up, folks. The dollar's going up. The market's going down. We're going to be right back.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit TFNN.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Are you tired of chasing after the crowd and getting into stocks with no real plan? Start getting advice that works for you. Let Bud Rolfs, Chief Technical Analyst of the Tiger Trading Post at TFNN.com, be your personal guide through the jungle that is the market. Bud offers personalized and customizable programs for investors who are serious about making and saving money in the market. Whether building a core portfolio for you or providing you with a steady diet of great swing trades, the Tiger Trading Post will add the perfect fuel to kickstart your wealth-building engine. All of the services offered at Tiger Trading Post have one thing in common. They all put Bud Rolfs right in your corner with you all the way. Stop by the Tiger Trading Post and Bud will personally describe each of his programs in detail, helping you decide which direction is right for you. So don't delay. Separate yourself and your investments from the crowd. Find Bud Rolfs and the Tiger Trading Post under the advisory services at TFNN.com today and get the personalized investing advice you deserve.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's take a look at some of our high-volume stocks out here. We had Merck was down 23 cents. You had Micron Technology off 61. JDS Uniphase was down $1.88. You had Sienna off $2.83. Las Vegas Sands was down $1.46. Dell was down 21. And right now we got our man K Rico up from Costa Rica. K Rico, what's going on?
Hey, Tom, did you guys see anything in the news about a very, very strong, powerful earthquake in Chile this morning? It was a very deep earthquake.
I did not. But that doesn't mean anything.
Yeah. Yeah. No, but the reality is, I learned this a long time ago from a gentleman who's very attuned and sharp about earthquakes, and the depths mean a lot, he told me.
Yeah.
Many years ago. And we had a minor tremor early this morning that was nothing. It didn't even shake my monitor that usually gets left to right shakings when we have tremors here. But the point is, I guess what I'm saying is, this deep earthquake could be a soon-to-be large earthquake going up the Coco Plates, which are under California, Mexico, Costa Rica, Nicaragua, all those areas. And I'm just saying, this is kind of like a warning. When I heard it was a very, very deep earthquake, it really gave me pause. So anyway, just passing along the information.
Well, when one of our tigers, we just looked it up, and there's nothing reported. I got earthquake.com, U.S., the government site, so I'd go check it out first, man, because it's not there, so.
Well, the point is...
You might have been having a good dream, man.
No, I actually was listening to Bud at the time that the second report that I saw come across my webpage, and
well, just listen. The easiest way is just pull up. You can pull it up. You can pull it up geographically. So, what are we going to look at today?
Yeah. GFI.
GFI. You got Goldfields Limited, folks. Lows 1178, the highs 1853. This is a headquartered company in South Africa. They do business in Africa, Ghana, Australia, North, South America. The lows 1178, the highs 53. Okay, so you own this. We're looking to buy it. What are we doing here?
I'm looking to get into it, but with you talking about gold going down, and at the same time the South Africans with the rand have the strongest potential, it leaves me in a quandary. Where's a good entry point? $16, $15.50? You
get $15.38. Right into 1626. And what K-Rick is talking about, folks, is this. Okay, so watch how this works. You go over to, if we go over to the rand, well, this is a natural hedge inside the gold market also. If we go look at the rand, what ends up happening is that for their properties that are in South Africa, what ends up happening is that they basically always get paid in U.S. dollars. Their expenses are in rand dollars. They're in plenty of other places, and in GFI's case, what you do have is that their pipeline is extraordinary. And the pipeline, folks, is the amount of gold that's coming online, and that amount of gold that's coming online at the correct price. And in GFI's case, they have it. So, yeah, on a pullback, I'd be all over it. Because what you're going to have here, and what you will have here, is this. The differential, folks, okay, inside the gold market is substantial right now. And I mean, and it will not change. And the reason it won't change, my take on it anyways, the dollar wants to go higher, gold doesn't want to come lower. So you have an expense ratio happening, you have the currency ratio happening, you have the ratio as what folks' expenses are. And I'll show you an equity, and if NGD, if you remember, When we first brought this equity out, okay, this equity is, I don't know, a couple dollars. Now it's $10.73, where other equities are lower. Now, what that's all about is this, is that they have a huge amount of copper, they have a huge amount of gold, but what that's about, my take on it anyway, is that what that's about is that they are right next to transportation, which is the Canadian Railroad. They're right next to hydropower, okay? So what they've done out of that equation, ASAP, is knocked two of the biggest expense ratios out of mining. Okay, and all those different things are taking place. Cooking, brother, have a great one, man. Have a safe one. Let's go over and we take a look at the Google. What you had with Google out here today, Google pulls back $9, $8.96. We come back with 3 million shares. Now we're at 591. The next stop on this baby is the 574. This wants to go test the 553, folks. The gap is not finished right there, though. The gap to get the gap closed is 540.93. And how we come into that, we'll say whether it wants to stop there or not. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
Expert market commentary and profitable trade setups can now be yours absolutely free. For a limited time, you can register to receive a free 2-week trial subscription to Market Insights, Tom O'Brien's daily market letter, an $85 value. Using advanced Fibonacci methods, volume indicators, candlestick charting, gaps in market timing, Market Insights will give you specific trade recommendations with price targets and price stops. Each morning at the market open, Market Insights is published with Tom's daily take on the previous day's market action, as well as updating any current trades within the newsletter. When market conditions warrant it, updates for the newsletter are put out throughout the trading day to keep you in tune with what's going on in the day's trading action. To order your free 2-week trial to Market Insights, log on to TFNN.com, or for more information, call 877-518-9190. Finding profitable trading advice is now easier than ever before.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at TFNN.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this this new charting software package that we're offering a 30-day, no questions asked money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to TFNN.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Vista Gold. For more information, just click the Vista Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And K. Rico wasn't dreaming, folks. We found that earthquake 101 miles down under 32 hours ago, 6.25 on the Richter scale. Thanks, KCP. Really appreciate that. Now, folks, let's go over to our man, Mr. Larry Pesavento. And if you haven't test drove Larry's newsletter yet, folks, you can come over to our website at TFNN.com. Right under newsletters. You can test drive that right here, right now, 2 weeks, absolutely free. And, of course, don't forget, Larry has his own program on TFNN that is broadcast every Monday and Wednesday, 12 noon. He also has a new Twitter service. And now, if you're interested in futures and you're interested in Forex, folks, come over to our website. You're going to see it right in the carousel. You can check out Larry's new Twitter service. Larry Pesavento, what's going on?
Hey, Tom, how are you this afternoon?
I'm doing great. You having a good day out there?
I certainly am, and I enjoyed watching you on CNBC today. I hope the people heed your warning. I have never seen a divergence like this in the mining stocks versus the yellow and gold metal, silver and gold, Tom. In 50 years of trading, and I have been, doing this for actively since then, that I've never seen divergences where the mining stocks are lagging so badly.
Yeah,
it's screaming, get me out, and unfortunately futures are different than the stocks, and look out, Gertrude, when it heads down. And we're seeing in platinum down $20 today with silver up $1. I mean, those are just unheard of swings.
Yes, and it's interesting here, folks. I'm sure that when people hear that their headline number in gold is 1433, which is at highs, and then they're in gold funds, they wonder why they're down 20%. And it's like, I'm sure people are looking at this statement saying, I don't understand this. How can I be down? Well, it's because the equities are down dramatically. If you own the physical, great. You know what I mean? But the reality is that the rest of that market is not there. In fact, it's not there also. Copper got killed out here today, folks. And if you look at a couple of the bigger companies, if you look at a couple of these Brazilian companies, they got absolutely smoked. I mean, they're way off their highs also. So,
It certainly is. It's and we're beginning to see divergences in the stock market too. Where we had the Nasdaq has been the one that led us up. It has turned to be the weakest. So that's another thing that's worth paying attention to. But as you mentioned on the show previously about Apple, being I think 20% of the Nasdaq. I mean, it's basically a one-trick pony over there. But if that pony slows down, you can see some really amazing moves. And believe me, the market is still incredibly overbought, even though we've been down a couple of days.
Well, like you were talking last week, Larry, and folks, it's important to understand that. And when Larry was saying that, listen, when we came off the highs on the 18th, that what he was looking for first is the volatility. And you got the volatility. Now, what happens with volatility, just so you understand this, folks, volatility in the marketplace, really the definition seems to be that, you're going down very quickly. And that's a fact. But what also happens, which we've had, you go down quickly, you're up. You give it up again, you get down. You're up. You give it up again, you're down. When that happens, folks, bottom line is that you're going lower. You're going a lot lower because they suck more money in as it comes in. They think it's all right, which totally makes sense, doesn't it, Larry, at this point? Because the bulls, every dip they have bought, they've made money. Now, now what ends up happening, of course, they hit it a couple times, and, bottom line is that there's some problems in paradise here.
Well, the other thing you mentioned, Tom, that is very important is the fact that the U.S. dollar, was standing on a precipice today as we came in at 76.15 or 16, and it held that level, at least short term. And but Tom, if you look at the overall other countries like Canada, Switzerland, and Australian dollar, and the Japanese yen, those are not even close to the lows. I mean, the dollar is very strong, much stronger than the euro and the pound versus these. So it's just basically the euro that they're playing games with right now. And I think it might be, the two central banks, the ECB and our Federal Reserve, making the dollar look bad for at least a short period of time, and then we'll see what happens. But that's where the money is
absolutely.
In that Forex.
Now, it's amazing. What Larry just brought up, folks, that's all technical. You want to hear the fundamental on it? This is amazing. The G7, okay, when you take a look at the long-term bonds versus the short-term bonds, right? Bottom line, folks, we have the largest maturity short spread. And what that means, folks, is that this dollar is going higher. You can check out Larry's newsletter right here, right now. Larry, thank you so much. Look forward to the show.
Thank you, Tom.
We're coming right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to TFNN.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
See, what we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's call, folks. Want to know what's going on in your world. Let's go over to the Dow Industrials. So Dow today down $79. No big deal. It had a low out there of 12,041. Came back 50 points. Now inside the Dow, this is what you had. Moving it higher was McDonald's, 3M, Coca-Cola, and General Electric. Taken away from it was IBM, Boeing, Caterpillar, and Chevron. So if we go over to Big Mac first, and take a look at the strength inside it. Big Mac, folks, was the counter trend bounce. It was up 26 pennies. Big Mac has already gone from $80 down to a price point of $72. Gets up there today, right into the gap, and fails. Big Mac went to $77.24. That bottom of that gap is $76.60. It closes at $76.29. We do 7 million shares versus 36 million. Okay, bottom line, that is going to be all the way back down into this 72 area. So that in itself, that was one of the strongest ones out here. Let's go to 3M next. We take a look at 3M. What you had with 3M, she gets right into her highs. She does 3.7 million shares out here today. That's after coming downtown with 5.3. We're at 92.40. She got to 93.55, also failed. Not as bad, but failed. Coca-Cola, good old KO. We take a look at Coca-Cola. Coca-Cola, you got to look at some of these charts, folks, 'cause it's amazing. Coca-Cola had made its high the 23rd and 17th of December. It got up there as a test that with 6.5 million. It came off those levels, folks, with 13 million and 17 million. You go back up to those levels with 11 million. Coca-Cola is not going to make it either. She's going to be back down to the 62 area. GE, good old GE, brings good things to life. What GE is done, GE had a breakout on the 21st of January. That's where it gapped higher. It had closed on the 20th at $18.43. Gaps higher, nice gap up, strong, 229 million. The high of that is $19.97. The gap, however, is $18.43. So now watch what GE has done. First time it comes off the high, it comes down to 20.08. It tests 20.01 today, and it does it light of shares. This is building cause, and this is what they love to do. First off, get to the bottom of the gap, which is 19.25. You'll get support there. We get support at the top of the trading day right now. It'll start hammering, get down to the bottom, and then you'll eventually see it close up the whole gap. Now, those are the strongest ones inside the Dow Industrials. If we take a look at the weakest ones, you had IBM. Now, what IBM did out here today, back down 5 million shares, not the end of the world, but IBM does want to back into 149. You're at 159 right now. Boeing, good old Boeing. What you have with Boeing is that she backed down 92 cents, 5 million shares. She's still got a consolidation going. That lower end is $69, not the end of the world. Caterpillar. Now, Caterpillar has been a monster out here, folks. No doubt. The cat, that little baby, had got up to some nice highs. Those highs were generated out there of 105. Caterpillar, not the end of the world. You're at 102. Yeah, it wants to get a 98. Chevron. A little different animal here now. Now we start getting into, we got to a high, couldn't handle the high, and this one's going to be important. The reason it's going to be important is this. Chevron has huge, this acceleration up on the 22nd is a nice acceleration. How we come back into that, meaning we're at 103.01, how we come back into that 102 to 99 area is going to be a big number. If we go to Exxonmobil, we take a look at Exxonmobil. Exxonmobil made the high. That high that was generated out there was on the 23rd. Now, it looks like there's a little bit of selling that's happening with ExxonMobil. We're at 84.72. Exxon wants to get into 83.96. Now, the 83.96 is important because if you get in there and it starts unloading some volume, well, bottom line is that you'll get a larger correction. And now a normal correction, just so you understand, a normal correction, even in a very strong sector, and this is no doubt a strong sector, okay, is a big number. The reason being is that the acceleration up with ExxonMobil, it went from $60 to $88 nonstop. And you're talking about an equity that has 4.9 billion shares. If we actually go to the XLE, which is the whole energy sector, that still is strong up there. You know, the XLE had hit a high out there of 78. We're at 77, 79 right now. The banking sector, the XLF. We take a look at the XLF. That is a different animal. What we have with the XLF is this. These are the financials. Financials made the high out there on nothing, 32 million shares. It pulls off that with 101 million shares, starts busting into those lows out here today with 68 million shares. Now, inside that context, what do we have? Well, we take a look at it. You get JP Morgan Chase. She held out here today. I was only down 33 cents. Bank of America, she held. That was only down 9 cents. We take a look at Citigroup. She can't handle it. Citigroup was only down 2 cents, but she's out of the range, meaning the higher range. The higher range there was 457. You're at 452. That putting Citigroup into the 411 area. Goldman Sachs. What we have a Goldman is that Goldman has broken the swing point. The swing point we're talking about is 160.12. We are at 159.15. And, of course, what Goldman technically has a problem set up here. It looks to me like Goldman wants to pull back to the 146 area. Fundamentally, they absolutely have a problem because you're going to have the trial start, I believe, tomorrow on the hedge fund that... Not that, one of Goldman's directors were involved. Let's put it that way. And that's never a good scene, period. We'll see where that does shake and bake. We take a look at let's see, American Express, AXP, out of that industry. American Express, it looks like we're going to be spending less money on our American Express card. Either that or it's going to get paid for things a separate way. And the reason I'm saying that is this. Is that American Express is at 43.71. It rejected higher price today. It wants to get down to 39.33. That's a big number, folks. That's a big number. And I come down there. That test hasn't been out there. That low of the 5th of October basically wants to get tested. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. We'll be coming right back.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
for some extra cash to help pay for all those great Christmas gifts you just bought? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors, and we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up to the minute spot prices. We insure your items for up to $75,000 per shipment, free of charge. We videotape the entire valuation process so you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Exeter Resources is building a mid-tier mining company. It trades on the New York Stock Exchange Amex under the symbol XRA. Exeter Resources has made one of the largest discoveries of gold and copper in recent years. The new find is in Chile, a mining-friendly country. The discovery now has 26.4 million ounces of gold and 6.7 billion pounds of copper. Chile, a leading country for mining investment, produces over a quarter of the world's copper. With gold prices reaching their highs as investors seek refuge from a devaluing U.S. dollar, now is the time to take a look at Exeter Resources as it advances its program in Chile through drilling and mine feasibility studies. Their goal is to demonstrate how their discovery in Chile could become one of the largest new gold and copper mines in South America. If you'd like more information, you can click on the banner at TFNN.com or go to ExeterResource.com. Exeter Resources, traded on the New York Stock Exchange Amex under the symbol XRA.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
This segment is brought to you by TFNN. Don't forget, you can test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And, when we're talking about the for-profit education companies, folks, let me tell you, the noose is getting a little bit tighter out here. If we go over and we take a look at Apollo, which is University of Phoenix, that equity is down. It's $44 from 90. What you did have out here this morning, the U.S. Supreme Court refused to question a jury verdict that may force Apollo Group, the owner of University of Phoenix, to pay more than $300 million for deceiving shareholders. The justice today rejected an appeal from Apollo, accused of withholding an educational department report that said the company was illegally paying recruiters on the basis of enrollment numbers. Apollo, the largest U.S. for-profit college operator, said the suing shareholders didn't show that the eventual release of the report details caused the company's prices to fail. This whole deal, folks, is, I suspect, coming to an end. And what I mean specifically is that, these equities, no doubt, had gone to the moon. They went to the moon, folks, though, on the back of taxpayers. They went to the moon on the back of veterans. They went to the moon of the back of basically fraudulent sales practices. What ends up happening inside that market is this. Okay, so check how this works. You can get a loan. You get a loan off this education loan. You can't, if you go BK, those loans stay with you. So it's basically put people into slave labor in a huge way. The percentages of the revenue of these for-profit colleges is off the charts, meaning green checks, okay? And Business plan, yeah, they developed that business plan and they went for it. And these equities, you know, whether we're talking 2000, went from $10 up to $98 and been going down since then. Bottom line is that I suspect that they're going to have to actually get people educated. And if you know, it's amazing. If you actually look at some of the prices in these colleges are more, they're like $36,000 a year. I mean, they're so far off the top, it's like insanity. And of course, what ends up happening is that, you know, a community college is going to get you just as much, you know, because what has also happened here, folks, too, is this, and you know, unless you're getting an engineering degree, a nursing degree, this whole college thing at this point, you have to come out of there being able to have a profession, because the reality is that either that or you need a profession. That's the bottom line. They've bamboozled so many people into thinking that, you know, I got to get in debt for $120,000 and, you know, I don't have a profession out of it. That is absolutely insane, folks, okay? You got to go out and I do understand that, you know, without a degree, you're in trouble, but you certainly, I mean, unless it's going to be a degree and a profession simultaneously, my take is that it's baked in as part of the bureaucracy to do what? To basically get people in debt, to keep them on the wheel, and, you know, it's just a juicing of all the things that are wrong right now out there. Dollar index out here today, 76.50. Bottom line is that what you're going to see out here, that dollar index wants to go higher. You rejected those lows out there, and the lows that we still rejected were only the November 4th lows. When you take a look at that dollar index, what you have, we bring this back. The lows in the dollar index, folks, go all the way back to 2008. The first low that was out there was 70. It was 70.80. That was in March of 2008. The next low out there was November of 2009, which was 74. The next low was out there was 75.23, and that was November. So the bottom line is that this, you know, every time you hear that, yeah, the dollar's at lows, well, the dollar is at a low price, but it's 10% over where the dollar was in 2008. This is Tom O'Brien. This is TFNN. You stay right there, folks. And don't forget, folks, we start programming at TFNN at 9 a.m. Eastern Time. We go from 9 to 1 Mondays, 9 to 2 Tuesdays, and then, of course, 4 to 6. That's Monday through Friday. Get all that programming live at TFNN, archived at TFNN, as well as iTunes. We're going to be right back, folks.